Hey, welcome to Dow Stock Talk, where I talk about topics relating to investing in finance, but more specifically, the stock market. In this video, I'll be going over whether I think Facebook is a buy. But before we get started, make sure you smash the like button because it helps YouTube algorithm. It helps YouTube know that this quality content and help my videos reach a broader audience. And also, if you're a big fan of finance and investing, and you like finance and investing t-shirts like this, make sure you check out my store, Wall Street Stock Apparel, where I make custom finance and investing t-shirts. Okay, and no further ado, we're going to get into it. I'm going to be going over all the pros of Facebook, all the cons, and we're going to look at the financials, and then we're going to just kind of assess on why I came to the conclusion whether I like Facebook or whether I don't like it. But all right, no further ado, let's get in it. So as we can see, Facebook from year to date is down 44%. That is a lot, you guys, in the past from year to date. Just today, it's down 4%. So as you can see, Facebook stock price as the recording of this video is 5/11. So this video will be released the next day. Is $188. Now, one of the things that I was kind of looking at it, and I jot some notes down as far as the PE. PE is, you can just look at this to see how cheap a company is compared to the amount of money that they generated from last year. So for me, like I said, when you're talking about high tech companies that have these PE under 15, to me, that definitely catches my attention, especially for a company that I think or I can foresee them making more money in the future. So that would mean, as far as when I'm buying the share, relative to how the business is performing, it seems like this is, like I said, a quick indicator. So to me, already off the top, I see that there's a great company, has a large market cap, and we see that it has trailing PE is much lower. So this is a good sign. You can't go over this just blindly, but that is a good particular sign. Now, on the contrary, what happened right here to cause the stock to end up going down? Well, it was a couple things. One, the overall market was already on the downward trend. Two, the main concern was slower users growth. So as we can see, let's actually pull up their earnings. Yeah, so if we can see here, I had to kind of edit the video. As we can see, the Facebook daily active users has been increasing. Now, normally, which is good. Now, why is this important? Because Facebook make all that money from ads. So they need people to actively be using the platform so business can be willing to pay for ads to be on the platform. So if people stop using the platform, that particular platform, business ad dollars will go somewhere else. So that's why you always need to see users on Facebook and increasing. For Facebook, attention means money, dollar bills. So definitely we have to keep that. So one of the biggest concerns when we've seen that drop for the first time from quarter 3 to quarter 4, we've seen the users end up slowing down. Never before, if you can see, each quarter's had that happen before. That really scared investors. Let's go back. That really scared investors, and it automatically, made the stock price drop really low. So that's why whenever the stock price goes down, you also want to know why it went down. So that was one of the concerns. Remember, 98% of their revenue come from ads. So if the user growth starts to slow down and other platforms get other people's attention, Facebook is going to be able to generate less money, because that's that bread and butter. Also, you have to remember TikTok. TikTok, as far as social media platforms, let's look at the most popular ones. So the most popular ones we have. So also you got to remember the Apple made an update, prompt users to ask them, do they want, I guess, some type of permission where social media can track their activities. So they do have that option. Before, that wasn't there, but that one particular thing could cost Facebook $12 billion, because a lot of people can't opt out, and then Facebook may not get the information that they would normally do from the Apple phone. Yeah, so this was the article about the Apple privacy updates. It will cost Facebook about $12 billion, as roughly estimate. Also, Google did that as well. So you got to remember, all of this as far as ad dollars affects their ad revenue. So that's one of the things. So that was one of the cons that they also had. Then you have, TikTok as far as 1 billion people on TikTok. Matter of fact, let me go to a chart so you can see. Alright guys, so I pulled up the chart. So as you can see, this is a little old. So Facebook right now, as far as most popular sites, and this is one of the things I think one of their biggest competitive advantage. Remember, when you're talking about Facebook, let's look at the top: Facebook, YouTube, WhatsApp. Facebook does own WhatsApp. Facebook does own Instagram, and Facebook does own Messenger. So we looking at altogether, they have over 3 billion people that are using that particular platform. To me, once you, that's almost like half the world's population. So once you have that many people on your platform, that attention, they have attention, that attention can easily generate money down the road. Like right now it's primarily ads, but as we can see something similar to like a Amazon dominance. We have all these people on the particular platforms, and then as time goes on, you can find different ways to generate money from that. But as long as they can keep that particular audience, that's where I would like to see. Now on the contrary, might be like, well, because they have so many users on that platform, others like TikTok and Snapchat and Pinterest, and well, all of them could actually take that away from them. That is true. You can make that argument as well. But like I said, I just wanted to go over with you certain things that may be important when assessing a stock. Also, let's look at a little bit of their financials as well. As far as a financial aspect, they have they're in great financial standings. They have relatively no debt. They also have, as we can see, lots of cash. They have $43 billion in cash. So like they have a lot of cash. They have a lot of people on their particular platform, as well as that, like I said, they also end up investing in $10 billion into the metaverse. Now, a lot of people may be whether the metaverse will work or not. I mean, I don't know, but based off of even forgetting whether the metaverse completely failed, I'm looking at the business from just their ad business alone. At this price, I think it's attractive. I think Facebook is attractive. Maybe once you start going over the $230 range, then I think maybe the metaverse success actually matters. Okay, so from an evaluation standpoint, we look at the discounted cash flow. It's pretty much when you broadcast future cash flows of what they think it will be based off of the amount of interest or the amount of growth that they expect or earnings, and discount it back into what they think the value is today. So according to Simply Wall Street, they're saying the fair value is 580. Most of the time, I always take these sites with a grain of salt. But as you can see, that's a huge range. That's a huge range different. So for me, like that 197, 220, even 230, even maybe like 235, 240, to me are good prices to pay. Now you gotta remember, I'm a long-term investor, so I'm looking at between along a longer term. So I'm looking at 3 to 5 years at least. If things go better, that'd be good. But like I said, at the price now, we're talking about 65.9% undervalued based off of what they consider the future growth and stuff like that. And it's not like we're talking about a company that's not expecting to grow. They are expecting their earnings and revenue is still projected to grow. And according to this, the forecast 12% as far as revenue and 13% as far as earnings. I checked my videos like this 6 months ago. These numbers do change, or subject to change, what can change everything. But like I said, to see a company trading at a low PE multiple, and they still have high growth, and they still have what I consider the network effect. Also, a lot of people aren't thinking about that they do make great investments that people like didn't kind of consider. As far as the future return on equity, 24%. They had a great return on capital. As far as the return on assets, they did really good compared to their competitors. Return on capital employed. You gotta remember, these are companies that acquired over time. IG, WhatsApp, Messenger. Their competitors was TikTok. They came out with Reel. So that shows me that they are adapting to their particular environment. Yeah, so these are from the first quarter results that was up. So we've seen revenue is increasing 7/7. Simply Wall Street projected that they were going to do, I believe, what was it? I think it was like 10 or something like that. But right now, from year over year, they're doing 7. Total operating costs increased by 31% year over year. As we can see, they did end up, as far as the amount of money that they made this year compared to last year, they did end up making a smaller amount. But you also got to remember 2021 was during, like, a little bit pre-pandemic. So this is kind of after the pandemic. So you gotta remember they also have been investing a lot of money elsewhere, as you can see with the investment for the metaverse and things like that. But the good thing is what we can see is we can see that their users are their users are increasing, so it's starting to increase as well. Family active daily users up 6%, monthly active users up 6%. So the only thing, this is the only main concern that I've seen. Oh, they're doing share repurchasing. Like to see when companies buy back their shares, the less shares out there, the more valuable your share will end up being. Also, we like to see a lot of cash on hand, $43 billion. And as we can see, the ad impression, this is the only major concern. They're reaching 15% more people as far as impressions. However, the average price per ad spent has the average price per ad has decreased 8% year over year, and that's probably because of Reels, because Reels kind of help push it out there. But as far as the amount of someone's going to be willing to spend on a Reel versus like a regular Facebook post or something could be drastically different. So like I said, there are pros and cons for both Facebook as well, whether you think it's a buy or sell. So I'm just going to quickly list why I think it is a buy. Personally, I like Facebook at the price, any price under $2.30. I would like to mention that because the market is in a downtrend, as long as the market keep going in a downtrend, Facebook could continue to decrease. But like I said, I'm looking at a long-term perspective. I find opportunities because my time window is probably longer than the market would be willing to make. Like, so these are some of the reasons why I like it. Has a low PE. They have over 3 billion users. The revenue and earnings are still growing relative to the fundamentals. As far as I do think that they will be able to monetize Reels. No one really talked about this, but all the people on their platform, I believe Facebook Marketplace can take on a role like eBay. Also, you have to remember they have the Oculus glasses and stuff. Right now, they're reporting losses, but that is for the optimism. If you're looking on the optimism side, that can create another more future growth in the future. Also, previously we've seen they made a lot of great investments. They got, but what's that? Messenger, IG. So they're making great investments. They're buying back shares as well. Their financials got a lot of cash. They're making a lot of smart investments. As far as research and development, as we can see, let's actually go up as far as, let's see. So as far as research and development, as we see, they're increasing the amount of money they're doing for research and development as well. So I like to see that the amount of ad dollars from the US and Canada is starting kind of to slow up. Yeah, so, and this is the thing that we also really need to pay attention to. Facebook average revenue per user, most of it comes from US and Canada. So if we see a fall off from users in US and Canada, it could definitely affect it. But as you can see, they also can get up the rest of the world numbers as well. And like I said, I think as far as the ad business, it probably will evolve over time, but I think Facebook can make the necessary adjustments. Now, like I said, there is pros and cons, but to me, from the investor perspective, I'm looking at probability, not possibility. And I like the odds for where Facebook price is now compared to the pros and cons. I like this particular stock price over. If I'm going to pick any other social media, I'm going to go with someone like Facebook. I told you they have the network effect. They are investing a lot of money into the metaverse, but even if the metaverse doesn't be successful, I still think Facebook is a very attractive evaluation. That's just me. Let me know in the comments below, what do you think about Facebook? If you haven't already, make sure you hit the like button and make sure you subscribe to my channel.